Glad to hear it. All right, Chris, thanks for joining me today. It's been fun.
Of course, yeah.
You just got back, or are you still out of town?
I did, yeah. I got back late Friday night from North Dakota, and yeah, it was a whirlwind, man. I mean, I was gone for like 8 days, but it felt like, I don't know, a month. It was so long, and my travel's not done yet. I've got 3 more trips in December. So yeah, it's a little whirlwind, but I was with people that I love and care about and don't get to see very often. So that made it, feel even more special. Spending some time in Houston with my best friend and his birthday, being able to celebrate that with him, and go to a couple football games, and then off to snowy North Dakota to hang out with my brother and his family for a few days for Thanksgiving. It was great. Hated leaving, my brother especially. It's tough. I really don't get to see him very often because he's in the Air Force and moves around quite a bit. But I got spoiled with them being here for so long in the DC area. So now it's my turn to travel and go see them.
Good. Well, I'm glad you had a good trip, and you got a bunch more coming up. But you do a pretty good job of blending in travel, family, friends, fun, and work stuff all at the same time. I keep hearing that that's a good way to do it.
Yeah. I don't know. When I go to these places too, like, especially visiting somebody who lives in that place, right? They have probably seen a lot of things, but I try to get them outside, not like outside their comfort zone, but basically like try to explore things that maybe we could both be interested in or all interested in. I took my brother and sister-in-law to like a Mexican restaurant in Grand Forks, and they'd been there before, but they hadn't really tried like the adventurous side of the menu. I was like, all right, well, you gotta let's try this, right? And turns out like there's some pretty good birria tacos in Grand Forks, North Dakota. Did not think that there would be, but here we are. And I'll definitely go back there when I visit again. And then hitting some places in Houston with my buddy too, trying new spots in his neighborhood, new breweries and whatnot too. We like to do that together. So yeah, it's blending fun and some work along the way too. I definitely had to jump on my laptop a couple of times and do some work. We've got a big investor webinar coming up for our Charlotte portfolio here this month, next 2 weeks from now. So trying to pull that deck together and make sure that our teams are set for that. And we have a new project as well, actually, that just popped up literally last week. So in between the times that you and I had talked, so that's on the horizon as well for a new live race coming down the pipe. So yeah, it's exciting. It's normally this time is like when everybody like steps back, plans for 2026, right, the next year, and then it's like, okay, cool, catch my breath, and I haven't been able to catch my breath yet. So we'll see. Maybe the week of Christmas, that holiday week, I'll be able to do that.
I respect that hustle, though. I understand. Glad to hear about that. I definitely want to jump into the new project. That sounds really interesting, and the webinar, because I think there's a lot of people that could benefit from that, especially in the Charlotte area.
Mm-hmm.
Beautiful area, by the way. Good choice.
It's really nice. As you and I had talked about before, I was down there a few weeks ago, end of October, and got a chance to walk the properties and meet with our local team there. And yeah, I mean, it's growing, right? It's an awesome area. I got to experience that side of things, right? The business side, but also the personal side. I went to, I'm a big Buffalo Bills fan, for better or for worse, usually for worse. And I went to the game. It was a better day that day. We beat the Panthers and got to go to the game and just experience downtown. I hadn't been downtown in a little bit, and, see the growth, see all the fun people that are there. There's a lot of New Yorkers that have moved to the Charlotte area over the last 10, 15, 20 years. And a lot of Bills fans, which was fun. Just, getting to experience the city in kind of a new light. I'd been there before many times and visited some old haunts, but there were some new places too. and experience the neighborhoods like around the apartment buildings that we have too, just to get a sense of like, how people live in these areas, right? And what the growth looks like, what the opportunities look like, for future investment, and then potentially for, continuing to improve these current properties, these current assets that we have as well.
Well, that's a pretty exciting movement. So I know we talked a little bit last week or 2 weeks ago, something like that.
It's a blur.
The travel thing, I did some traveling, and all this kind of blends together. Whenever we last talked,
It could have been February. I don't even know, man.
it wasn't February. I'll tell you that much. It was probably November, but either way, like you and I bonded quite a bit on the mindset piece, and the way that like basically your philosophy, because I think we share a lot of those things.
Yeah.
But so to back away from that a little bit, can you tell a little bit of your story and how you got into your role at Crestline Ventures? I think that would be a really cool thing for people to learn from.
Yeah, for sure. So I don't come from a real estate background. My family is not wealthy. We didn't own a ton of properties growing up. Both sides of my family are dairy farmers by trade. And historically, both sides of the family, tracing back to like the first people to step foot in this country, started to be dairy farmers, and that's how they made their living. And they knew the value of hard work, dedication to their craft, and their families as well. I absolutely love both sides of my family and super close with them. Still go to New York, where most of them are based now, very often to see them. And that background taught me the value of hard work and dedication, and no matter what your craft was, that you plow yourself into it. That background though also kind of, and I talked about this, right, we kind of created a scarcity mindset though too. If you're all of your capital, basically, right, all of your efforts are into one crop or one plant that year, right, like, and it doesn't go well, then you're SOL. So it also taught me diversification. So as soon as I got into my 20s and I went to college, I was the first person in my family to go to a 4-year institution, and I started learning the value of diversification, and especially with investments. So I started getting into the market. I had an uncle who was a financial advisor, actually. He married into the family, and really, I saw him building his business and his portfolio, his book of business, and the way he treated his clients, and help them build their dreams, right? And I took that and kind of applied that to my business as well, and my sales background as well. And I wanted to be able to help people achieve their goals and their dreams through these investments, these products, basically, that I could help them with, right? They're just tools at the end of the day. All these investments, all these asset classes, they're just tools at the end of the day, but you really have to figure out where you want to go with your goals, right? So that scarcity mindset that I had growing up from my family, from the farm, was not going to get me to my dreams. It was not going to get me to retire before the age of 50. It was not going to help me get my mom retired by full retirement age, or before her full retirement age for Social Security, right? That was her original target. It wasn't going to help me get the time and location freedom either that I've been seeking, to spend more time with my brother and his kids, and my grandparents up in New York, right? And not be like tied to a sales territory. So all of that being said, all of those goals, they didn't match with what my strategy was doing. So I had a conversation with a sales colleague of mine, lamenting about the grind, the endless grind, and building someone else's business, and not really seeing a light at the end of the tunnel. Those goals, right, that I had set for myself seemed so far out of reach based on my current strategy. So something had to change. This friend of mine recommended a book by Michael Blanc called Financial Freedom Through Real Estate Investing. I read that thing in a day and a half. Those that know me know I don't read very quickly. I take forever to like finish a book. I mainly do audiobooks now because of that. But I read that thing in a day and a half, and the principles just clicked. The tool that he uses to achieve financial freedom is multifamily investing, apartment investing, right? But the principles remain the same no matter what kind of tool you're using, no matter what real estate vehicle you're using. It could be land, it could be oil and gas, multifamily, whatever, right? Storage units. I know, and now I've met a bunch of people in each of those particular niches who are very successful and make it work, and also tend to have a blending of all of those niches into their investment strategy, which that world was not even in my thoughts, right? When I was growing up, it was, thankfully my mom was like, no, you guys are going to college, you're getting out of here. You're not going to work on the farm forever and be trapped there. And you know, there's something different for you guys out there. So I'm very happy that she pushed us to do that, me and my brother. But what that book really taught me, and subsequently Rich Dad Poor Dad too, which I read after that. Usually most people read that before. I wish somebody had given me that book, you know, when I was 17, 18, right? And could go back in time and start over. So now, side note, I actually gave that book. They have a teen version. I gave that to my brother's kids because I want them to kind of get in on this right early and pique some interest, hopefully, by the time they're able to figure that out, and start investing on their own. You know, I read that book and it clicked. I ended up figuring out they had a mentorship program, and I tend to learn best through having mentors and experiential learning. So I like to digest all the information, learn it, and then put it into practice and have a guide alongside of me, making sure that I don't make the big mistakes. So I was more than willing to pay for their mentorship program and just dove headfirst in like 2 weeks after I read that book, and was in the program for, you know, many months, and met a bunch of my future business partners and learned the ropes in terms of underwriting and capital raising and all the fun stuff that you need as the foundation to build this type of business.
I appreciate that. You put up a lot of interesting things, but like one of the things that you're tied to your main goal of like time freedom, a little bit of geographic freedom, all these things that can be achieved by this. So what is a typical day, if there is one? If there is one, there may not be, but what does a typical day, like today's a Monday, look like for you if you had to make a typical day?
Yeah, there's not a typical day, but I can give you pieces and then, you know, figure it out from there. I try to make it as regimented as possible, because if you don't, it spirals, right? There's always fires that pop up when you run a business based on people, right? And assets in terms of buildings. There's, you know, any number of headaches that can pop up when you are the landlord, right? At the end of the day, this is why a lot of our limited partners get in on that side, on the passive side, because they don't want to deal with these headaches, right? They don't want to deal with the 3 a.m. broken toilet calls or a fire call. You know, we had that on a property, or the broken elevator, right? Like there's all sorts of things that could possibly happen that happen right when you own real estate. So yeah, there's no sort of typical day, but I do spend a lot of my time networking. So I spend a lot of time on LinkedIn. That's my kind of chosen avenue for, you know, meeting new people and also educating the people already in my network. So I spend a good amount of time in the morning, usually post Monday through Friday. If I'm not traveling, if I'm traveling, it's so hard to like be on there, but yeah, I usually post in the morning, and then active commenting on a bunch of other people's posts and my business partners and people within my network, and responding to DMs throughout the day as well from potential investors that might be interested in learning more about the business and what we've got going on. And then, yeah, we have weekly property manager calls as well. So for the 2 assets that I have, we have a asset management call for each one of those, one each week, so we can just keep tabs on what's going on the property. we have two business partners that are local to Charlotte, and they are on site every week, following up on every detail that you could possibly think of, work orders, managing the manager. That's a big part of it. All the metrics that go into these types of deals, they're on site tracking it and making sure that what the numbers say is actually what's going on site. And then we have these, manager meetings for us who aren't exactly local to the property, that we stay in touch and make sure that we know what's going on as well. And we can tell our investors firsthand what's going on. So those are a big part of the week as well, preparing for those, as well as, the actual meeting themselves.
Awesome. No, I appreciate that. Look behind the curtain. It looks like. I like that you essentially used the mentorship early in your journey, right? When you said you dove in, and I respect that. So you bought speed by finding the right mentorship with a proven system and folks to help guide you with accountability along the way. And now you're giving speed. People are buying speed from you, and essentially the safety of not having to deal with the 3 a.m. calls or the flyers that come out. It's a good relationship. So you benefited from that, and now you provide that to everybody else.
Yeah, it's a good way to put it, because not a lot of people are willing to drop tens of thousands of dollars to learn a brand new niche, a new asset class. And I didn't know about it either, right? Until I read that book, until I dove in, I didn't know about it either. And that was only 3 years ago, right? So I'd spent a majority of my life going through just investing in the stock market roller coaster, riding the ups and downs of that, and then finally learn, oh, wow, actually there's a whole other avenue that I have access to, and I can get the knowledge and consume all of that, and then be able to help, my friends and family, my network, access that same opportunity. So, my business coach says that all the time, or said that all the time, like you're doing a disservice to your network, to your people, by not telling them about this, right? Because I didn't know about this. I didn't hear about this until, I was in close to my 40s. And if I could tell, 20-year-old me, hey, don't be a dummy. Like, don't buy that, brand new cell phone that you don't need every year, right? Like, don't buy that new laptop, like, invest it, right? And here's how you can do that. So, I would definitely go back and do that. And that's the service that, just like you said, that we can provide is giving that speed to people, giving that education to people, hopefully early on in their career. But if not, that's okay too, right? Like, there's no age limit to this stuff. There really isn't. I've talked to folks in their 60s and in their 70s who are either retired or close to being retired, who want to leave a lasting legacy for those that are coming behind them, right? For their kids, for their grandkids as well. And this is a way to do that in more ways than you can possibly get with any Wall Street product.
It's a great way to do that. Yeah, especially the legacy piece. So, like, right now, I know there's lots of trends going on in the market, but what's the biggest trend that's affecting you and your company right now?
That's a good question. So one of the things that we talk a lot about internally as a team is concessions and rent growth. That is a key driver to expanding our NOI on the properties, and eventually, passing that investment onto that distribution, onto our investors who have, put in their hard-earned money into these deals, right? So if you're in an area, if you've invested in an area, you bought property in an area that is not growing, or is maybe even seeing negative rent growth, then you're being hit very hard. And there's a lot of negative headlines out there. I read all the rags, a lot of negative rent growth, or, just flat rent growth projected, for a lot of major metros over the next couple of years. And nobody knows exactly what's going to happen, right? But you start hearing that, and it can become kind of an echo chamber. But when you dig into your market, to your sub markets as well, there's so much opportunity, and you have to really know that. And what that means is that you need to be invested with a trusted general partnership team that has their finger on that pulse. right? Just like we have in the Charlotte market, just like other teams have in their home markets. So for us in particular, we know that, especially with the first property we bought in South Charlotte, there's no new construction slated for the entirety of 2026 in that area. So we're not going to have new buildings coming online that we're going to have to compete with for concessions for, you know, properties that have newer amenities, right? We don't have a lot of new flashy amenities at that property. It's a 1991 property that got renovated in a couple of years before we bought it. So it's still a great property, but it doesn't have a pool, right? It doesn't have a dog park, doesn't have a gym. It's got a gym, a small gym, but not like one of these big flashy gyms, right? So you have to compete with a lot of those because that's what your tenants want, right? Tenants these days, they want those flashy amenities. They're willing to pay for them. Okay, well, how do we create a value proposition and position our property against those competitors, right? So the good thing for us, for that South Charlotte property especially, there's no new properties coming online next year. So we're not looking to have to give out a ton of concessions to keep our occupancy up. Now, when you look at our other property though, in North Charlotte, University City area, that does have new properties that have come online. We usually look within like a 3 or 5 mile radius of our properties to kind of figure out what our comps look like, right? So that side though, we have had to do concessions this year. We have had to give, you know, maybe second month free rent or, you know, application fee waived, you know, whatever it is to help drive occupancy to your property and keep it up, right? We love to aim before above 90% occupancy for each of our assets. That's where we stabilize it and we have a really strong asset. Now, we've had dips because, you know, folks move on to these new buildings and, you know, maybe we've had to deal with evictions as well. That's another thing that the general partnership team has to deal with, especially when taking over a new building like this newest one that we just brought online 4 months ago. You know, we inherit older tenants and have to deal with that as well. So some of those trends, those are definitely affecting us, right? I can speak specifically to the Charlotte market just because that's where our assets are, but we are also seeing projected rent growth next year of 2%. All right. And it could be higher based on, you know, your submarket as well. So that's one thing that we keep our finger on the pulse on is that, yes, all these negative headlines, all these evictions, all these concessions, you know, it's easy to get lost in the sauce, but at the end of the day, we have seen steady rent growth on that first asset and they're projecting it for next year on the second asset that I'm a part of as well for this team's. This general partnership team had purchased another one just before I came on with them a couple of years ago. So in total, they have 3 within the Charlotte area, and then 2 are within one property manager's portfolio. And then we have this latest one, which is a different property manager that we kept on when we purchased it about 4 months ago.
So I really like how sort of in the middle of that, what you did is you avoided the opportunity to slip back into scarcity, right? So you had mentioned that's how you started your life, and then you found a way out of that with essentially a brave action, right? With some good coaching. And then it would have been really easy to follow those headlines and read the surface level, I guess we can call it news or market insight or whatever's going on, whatever's, you know, the narrative. And then, but you decided not to. No, actually, if I look into it, it's actually pretty good. And 2026 looks awesome. So I really like that you avoided slipping right back into scarcity.
Yeah, we see the overall trends too of Charlotte in general, right? We see population growth, job growth, you know, strong economy there, diversified economy as well. Like we know the fundamentals are sound. That's why we invested there, right? It wasn't, these aren't 1-year deals, right? These aren't 2-year deals, right? These are 5, 7, 10-year deals, right? So if you're going to invest your hard-earned capital and your investors' hard-earned capital into a deal, you have to know what it's going to look like, or at least projected to look like long term, right? This is not a short-term thing. So for investing in, you know, an area that's expected to bust right next year, like that doesn't make much sense, right? Yeah, Charlotte's projected for at least another 50% population growth by the year 2050. it's already it's already over 1 million people down, in the exact metro area, or sorry, the 3.5 million people almost in the whole metro area, and about 1.2 in the immediate city. So like, another another boost to that is only going to help us and keep our buildings full over the next 5, 7, 10 years that we expect to hold them and then eventually flip them.
That's amazing. Good job on the fundamentals there. I will have to make a trip to Charlotte. Just let me know when you go there. I want to go check it out again.
Oh, 100%. Yeah.
So you did mention earlier your investor webinar for the Charlotte portfolio. Is that something, excuse me, sorry. Is that something that is open to a large population that people could sign up for, or is that more of a closed group, or how does that function?
Yeah, that's a good question. Good distinction, because this is specifically for LP investors who are already in on these particular deals. So we're going to dive, deep into the numbers on these ones and give them exactly, what's going on at each property. So this is different. Usually we do property specific webinars. This time we're finding that we have just, a lot of folks who are interested in what's going on in Charlotte in general. So we will kind of want to give them a broad view of the city, of what's going on, of the portfolio as well, because each one is in a different section of the city. And then this new one we have is actually just outside the city environs in Shelby. So like we want to give them a full picture, and then also, specific to their exact investment and what's going on at that particular property. Because I've got some investors who are in one, but not the other. So we're trying to do something a little different this time and just see how it works. But typically we do these webinars, investor updates specific to the property.
Good. Oh no, that's a great way to do that. That way everyone can know exactly what they need to know about that property.
Yeah. I mean, most of these folks are busy, right? Like they don't have time to sit down and watch like an hour-long webinar. They want to know, okay, how's it performing? Is my money safe? What's going on in the next few months? Boom. Okay, on to the next thing. Right. So one of my investors is heavily invested in real estate across many different niches, right? He doesn't have time to like sit down for an hour, and runs his own business. He doesn't have time to sit down for an hour and just, watch about what everybody else is doing. Most of them want quick hits. And then, if they have time later on, maybe they're on an airplane or something, they can watch the rest of it later.
You're taking care of your clients. I respect that. Yeah. So you also mentioned a new project, maybe a library. What's that?
This one is a multifamily asset as well.
Okay, gotcha.
Yeah, yeah. So this one's in the western side of Charlotte. Can't say too much about it yet because we're at the very, very beginning stages. Yeah, this one's pretty new to us. So we're still in due diligence, making sure that we're doing everything we need to do to be able to prepare for it and make sure that it's something we want to move forward with once we peel back the curtain. And then also, bring it to our network. We've got some investors that are kind of on our, they want to know about things before everybody else does. And we like to make sure we take care of them and bring it to them, any potential new opportunity. This is a little preview. And it also helps us too, right? If it's something that we, not just speaking specifically about this new project, but in general, when we get new opportunities, if nobody's interested in it, then we're not going to move forward with it, right? Because we want that LP capital to come in and partner with us on that project. If it's something that they're not even interested in, maybe it's because the returns don't look as promising as maybe some of the past deals, and those change all the time, obviously. Or maybe it just doesn't fit their investment ethos at the time too, right? Some of these projects are more value add than others. The second one that I was in on was a Class A, so that was different than the Bs and Cs that I had been underwriting, and the B that we got a year ago, which was a little bit more of a heavy lift. This one wasn't. So it doesn't have as as high of returns, but maybe there's another project coming down the line that does. It all depends. The interest rate environment too is really, really driving how these deals pencil out too, and they have, right, for forever, but also especially for the last couple of years. The rates as they went up definitely became harder and harder to get these deals to pencil out. So what we're looking for now is potentially a refi opportunity as well. We're always looking for that, but that would be awesome on the second property, especially because that's something that we've really factored into that particular deal. So sometimes just with the evolving, nature of the debt and the capital stack and kind of, what that looks like, it just depends on who might be interested. So we try to go after things that our folks are going to be interested in, obviously.
Oh, yeah, for sure. So for you guys over at Crestline, what's working really well right now? And what's been frustrating that you guys, maybe it's a 3-foot wall, or some sort of an obstacle. There's obviously things that work super well. It sounds like a bunch, but everybody runs into little roadblocks as well. What do those look like for you right now?
Yeah. That's a good question, because it's kind of two ways to answer that. One is like me specifically, because I am Crestline Ventures, right, at this moment. And then two is specifically about the asset management piece, right, with the properties, and then trying to find new opportunities as well. So, that's we've had I'll address the properties first, because I think that's probably the easiest thing. The biggest roadblocks, the biggest challenges for us, for especially the newer property, has been evictions, trying to get people to pay their rent. When you inherit assets like these from owners who maybe have been absent in the past, and that tenant base isn't used to having to pay their rent by the 5th of the month, right? Maybe they're used to, I'll let it slide this month and, make sure you're on time next month kind of thing. It's like, that's not how we operate, right? Like, and you also have to deal with new relationships with a property manager that you haven't worked with previously as well. So we started on this deal. I'll just speak to this newest deal first. Like, we started on this deal back in April of this year, and we didn't close on it until the end of July, basically early August. So we've been working with them, pretty much a majority of this whole year, trying to change the culture there. It's hard to do that right away, right? It's going to take time. That's why we build in, conservative underwriting to these deals, to make sure that investors know it takes time to change the culture from, people paying their rent on the 20th of every month because maybe they didn't get, all their paycheck at the beginning of the month, or they got laid off, right? That's another thing that we have to deal with too. But at the end of the day, like, the rent needs to get paid, right? And yes, we can maybe do a little bit of a grace period, promissory note, whatever it is. But at the end of the day, if you're behind, unfortunately, we have to figure that out. And in a lot of cases, we've had to move on eviction proceedings. It's not something we like to do, but at the end of the day, we can't have, 96 people not paying their rent in our buildings. So we've been really fortunate to, have a property manager who's active and making sure that we're changing that culture there. And that is one of the roadblocks that has popped up on this newest one, especially on our call last week. On our GP call, with our property manager, we had that discussion, very frank about it and how to move forward so that we don't have as many evictions each month, moving forward. So it's working with the rest of the GP team, the folks that are on site, the general partners, the county at the end of the day as well. The court system, right, has to get involved for that. And then sometimes the sheriff has to get involved too, once we have a lockout. So there's a lot of layers to that, but that is a roadblock. That is a challenge that really does affect your bottom line. It affects your NOI at the end of the day, because you've got a lot of folks who maybe have, thousands, sometimes tens of thousands of dollars outstanding that they owe you, and you might not ever see that, right? So it's important on the front end to get, good quality, paying tenants up front, and we have procedures in place to do that, screening procedures and background checks, credit checks, all that. But sometimes financial hardship pops up too, and you have to work with people to resolve that. And if they can't be resolved, then they have to move on, and so do we. So that's kind of property specific. My business specific is definitely, as it evolves, as we get more properties in the portfolio, we get more investors, time constraints, time management, right, becomes a more of a challenge, more of a roadblock, right? It's asset management, it's capital raising, it's lead generation, it's social media. I still run all my social media stuff. When you reach out to me on LinkedIn or Instagram, Facebook, whatever, like you get me, right? There's going to come a time eventually, not right now, not in the next 6 months, next 12 months probably, but eventually down the line as the business grows, I'm going to need to bring on, someone else to help out with all of that, because the balance is just going to be thrown off. That's something I'm actively looking at. I'm considering as we add a potential another property to the portfolio. Time's going to be spread even more thin. So I want to make sure that I'm always there for my clients and always there for my prospective clients as well. Folks who were just like me, 3-4 years ago, who didn't know about this niche, and now want to make it part of their goals, part of their investment strategy. So that's a roadblock for me, just personally running my own business, that I'm finding, to be a challenge, and looking for ways to address that.
I understand that very well.
You would.
With your sales background, the lead generation piece, and trying to, like you and a bunch of other entrepreneurs, right? Trying to do the social media piece, because that's so important today.
Yeah.
When do you do that? I don't know. Is it happening at 10 p.m. real quick? Is it happening, one full day for the whole life? That's a lot. I get that. That is it's a very common pain point you share with a lot of other leaders in your space.
It can be a lot, but we also have a lot of tools at our disposal now that we didn't have even like 2 years ago, right? Like ChatGPT for me has been a godsend. I know a lot of people decry AI and its creep and its slop that it gives us on social media sometimes. But for me, I found it incredibly useful. I follow a few creators online on YouTube as well that have used it to transform their business and to give them more time back in their personal lives. So that, to me, I mentioned time freedom from the jump, right? Like that has always been a driver for me. How can I use these tools to gain more of my time back? Whether it's investing, passively in commercial real estate to do that, which is something I talk, very passionately about with my circle and people interested in that, but also within my own personal life, right? How do I use that and those tools like AI to be able to give myself more time back with my loved ones?
Massive respect for that. Oh yeah. So the next, especially with all these new tools and all your new developments that are going on, a lot of stuff happening. Where do you see yourself, or what do you want the next 6 to 12 months to look like for you and for Crestline?
Yeah, good question. So I've always had this goal of getting to 1,000 doors within 5 years of starting my business. I'm on my way to do that. I've got almost 150 now within the last year, and these deals do take time though, right? Like they take a lot of time. Most limited, partner investors don't see that time that you really do put in behind the scenes to get this deal to closing, and then all of the asset management time that it takes to run the deal and to achieve those returns that you're targeting. So for me next year, so I've basically done one of these deals per year, right? My goal next year is to do 3. That's the goal that I've set for myself, that I really like to achieve. We've got one in the hopper right now, which is great. That could be awesome to knock that out in Q1 if everything comes together, which sometimes it doesn't. We had another one in the queue early this year in 2025 that ended up falling out. And that was something that we backed out of. We could have had 2 this year, but sometimes it just doesn't roll that way. So that's one goal that I have. Now, what that means for me and for my business personally is that it's not necessarily pigeonholed just to Charlotte as well. So I've got contacts and teams in other growth areas, other growth markets that I've cultivated relationships with, and just maybe haven't necessarily had the capacity to jump on because I've been so focused on growing our portfolio in Charlotte. But now have the capacity to be able to do that in 2026. So I'm actively evaluating deals in other markets as well, because my investors are asking for that too. They want to know about opportunities outside of Charlotte.
Oh yeah, oh for sure, I understand. So as you have done the brave path, I'm going to call it, right? Big things, you've taken the risks, you've moved, you had mentorship, you're moving towards your goal of 1,000 doors, and you're going to make some awesome progress in this next year. I hope you do. I think you will. You're just the right guy for it. So if you had any advice that you'd want to give to someone thinking about doing what you've done and what you're continuing to do, but they haven't quite jumped yet, what would you want them to do?
Yeah, the number one thing, and this is something I wish that I'd done earlier too, was take action. It sounds simple, but it's really not, because you can listen to so many podcasts and just like this, right? So not to denigrate it, because it's very valuable, right? It helps people. It really does, if you take action. You cannot just listen to podcasts or audiobooks or go to these meetups, these real estate meetups endlessly, and not jump into a deal. And it can be on the passive side. It doesn't need to be on the general partnership side. There's capital everywhere. That is something I've learned over the years before I even got into real estate. There's capital literally everywhere, and it just needs to be unlocked. There's folks that have old IRAs, old 401ks sitting doing nothing in the market, that I know of. Like I've met friends and family that have that, right? And they're just like, oh yeah, I think I made 5% last year. I don't know. It's like, well, okay, let's talk about that, right? How can we get that to be working harder for you without adding any extra work onto your plate, right? Without you having to become a landlord. So that's my biggest advice, is take action. Like, yes, get the education, but you don't know everything until you're in it, right? Like I didn't know I had never managed a apartment building before, or managed a property manager before, but you don't know until you actually do it and get in. And a lot of that is from the networking. I mentioned, going to real estate meetups. That's very valuable, because you have to find the right partnership. You have to find the right fit. These are people that you're literally going to be married to, right? For 5-10 years on each of these projects, on each of these deals. And you have to make sure that they have done their due diligence too. So you're vetting the operator, you're vetting your partners, you're vetting the deal, the market, all of that fun stuff, to get your ducks in a row. But you don't know that until you actually take action and get in. I didn't do an LP deal before I became a GP, excuse me. I jumped right in. I jumped in the deep end, right? So now I'm able to actively evaluate all of these teams and potentially look at LP opportunities for myself as well. But I didn't know any of that stuff until I actually took action. I got into the mentorship program. I started networking. I went to real estate conferences, meetups locally as well. Jumped on these like late night Zooms. We do like Zoom networking on a lot of these things. And you start to figure out who's real, who's legit, who's just kind of taking it all in, and maybe they'll act on it, later on down the line. It's like, I didn't want to be one of those people. I wanted to take action and get in. And I'm sure a bunch of your audience, I'm sure a bunch of people listening want to do that and feel the same way. And, they can talk to yourself. They can talk to me. I'm always open to jump on a call, just like you and I did before this, right? To talk and just see what is this about? Is it a good fit even? And if it's not, that's okay too, right? Like I tell people that all the time, most of the people that I talk to aren't going to invest actually. They may not invest with me. They may not invest in multifamily. They may not invest in real estate at all. And that's okay. You have to be willing to take the risk. And if you're not willing to take the risk, then, this isn't a good fit. Right. And the first conversation that I have with any prospective investor, we talk about that. That is from the jump. I talk about it. It may not be a fit for you and this investment, but it also may not be a fit for me too, because I'm building my business and I want to build a community of like-minded folks who are on the same page, so that when I have an opportunity down the line, I know everything about your investment ethos, your risk tolerance, your goals, to be able to bring it to you. And if I have people in my network that like doesn't resonate with, then that does everybody a disservice. So it has to be a good fit for everybody too. But yeah, take action. A long way of saying take action and get in the game.
I've heard that several times, and it seems to be the answer. Yep. Taking action. I love that. Yep. Especially podcasts, everything, everywhere. I think we've all done that for a long time. I know you did it. I did it.
Oh, yeah.
You also mentioned the sales background came in,
Mhm.
and with you're going to have lots of conversations that don't result in any business, and that's totally fine. Like, you got to get through all of those to get to one, you know?
Yeah. And that's okay, right? Like, even just piquing someone's interest, maybe it doesn't hit, maybe it's not the right timing. Maybe they are interested in it, but it's not the right timing. They don't have available capital. They've got travel coming up, they've got family emergencies, right? Life happens, and that's okay. Happens to me too, right? You have to be understanding about that. But when the time does come, when the time is right, I want to be the first call, right? Like, I want them to feel comfortable picking up the phone and calling me or shooting me a text and saying, "Hey, Chris, is there an opportunity right now? What do you got going on?" Right? And have that conversation.
I appreciate that. Dude, thanks for joining me today.